Hey, welcome to the Closing Beat, everybody. Happy Thursday. How you doing out there? Hope you're having a good day. All is good. Welcome to our stock market update show. We call it the Closing Beat because it references our name, Jazz Wealth. We're financial advisors here at Jazz Wealth. We just like to do things differently. We chose Jazz Wealth because it represents jazz music, right? Something where you have to be highly skilled and highly talented to perform it, but yet you have a bit of a softer, quirky side if you're very familiar with the any jazz musicians out there. They're a lot of fun. Hey, anyways, we're going to go over the stock market here today, talk about all the good stuff. On the right-hand side of your screen, you can actually see the stock market, kind of a weak attempt at a rally today. You know what I mean? It was good at one point, and then it kind of faded away, but a green day is a green day, so we'll talk about that. Initial jobless claims and continuing jobless claims came out today. A little bit worse than expected there. Continuing jobless claims continue to be the focus where people are looking at for their data there. Also, we had new home sales that came out way better than expected. We sort of got a hint of that on Tuesday. We talked about that with our new home sales. And actually, if you go over to our research site, if you're one of our research members, I did a post here, housing market stocks for a red hot housing market. Went over a whole list of them. That entire list was positive today and has been positive since we posted it. Not that they're recommendations, but we went through the idea of how to scan for them. How do you take that data and find what you're looking for in terms of maybe short-term trade, long-term trade, and things like that. So check that out on the research site. But for now, I'll get into the stock market. Hey, the Bank of America CEO came out today. Also, you know they watch your data, right? I mean, they're watching every last little thing there. He said that checking accounts have more balance, higher balances than they did this September last year, and spending is also higher than last September as well. That's a pretty positive sign, especially coming from a reliable data source there, if you ask me. So looking good there. We go over to the stock market. Let's take a look here today. We'll start with the Nasdaq, actually. The Nasdaq still up 25% year to date. September, however, has given back over 10% of it. A little less than 10% at this point here. We were up 40% at these highs. And remember, we did this on the show here to say that's kind of odd, right? It was a little bit of an odd thing. If we look at the history of the Nasdaq since 2000, gaining 40% at that time. We shared this with you, I think, on September 9th or something. Very odd, right? It's not normal. So for a gain to be so much by that point in the year, it kind of spelled a recipe for a pullback, and that's exactly what we've been getting here. Still not bad, right? If you look through the Nasdaq 100 today, you're going to find semiconductors were the real standout. I'll probably mention this a few times. If we go to like Lam Research, that bounce off the 200-day that we talked about, very good, very strong there. AMD is the obvious one, had a decent day today, up 1.5%. Some of the other ones like KLA 10 Core, great day on this one as well, up 2%. Semiconductors really helped out the Nasdaq today, and a little biotech as well, if you want to take a look over there. If we look at the S&P 500, I'm hoping to. There we go. A little bit of a bounce here on the day. It was just kind of a weak rally. At one point, it looked like we were building some steam towards something, and it just faded away throughout the day. While tech was the biggest contributor of the day, I'm sure you could have guessed that, it was kind of an interesting day for consumer staples. A lot of money actually moved over to consumer staples. In fact, consumer staples was the second best performing sector of the day, second only to utilities. So I thought that was kind of interesting there. A couple names stand out here. We'll look at Campbell's Soup. That's first. We happen to own this one, so we're excited to see it bounce there. 3.6% gain on the day, coming up off of those lows. Smucker's was another one. Good bounce off the 200-day moving average, looking good there. This is the pullback trade that we kind of talked about the other day. Kellogg's, you got a pullback here. People just decided that was enough. 2.5%, they're into it. My favorite, Mondelez. Also the strongest out of the group there. Also a pullback trade. You got your discount. People decided to dive in. These guys do Oreos, so how can you forget? Mondelez, Oreos. Just think Oreos there. For the S&P 500, you've got a gain of 2.2% year to date, but it's been a rough September. Officially the sixth worst September on record, with a loss of 6.5% at the moment. It's getting a little bit better there, but pretty tough overall. We don't need to say much about the Dow today. Just a small gain overall. If you look through the Dow, it was helped by Goldman Sachs, which got an upgrade at UBS. That gained 5% on the day, but it was hurt by Nike pulling back just a little bit. Pulling back from the earnings gap. It was its best earnings gap in over 20 years, so that's what you have there. If you take a look at the bottom right-hand corner of your page, you got our FinTips videos, how a 40-year-old will plan for retirement if he wants to retire early, so we went through that one. 4 reasons not to use a Roth was yesterday, and tomorrow is going to be a fun little math trick that I bet most people would fall for in terms of paying off debt or getting a loan and how those sort of percentages work. Just a little fun to play with your friends there. Hey, tonight we're going to do Wine and Wealth. Every Thursday we do Wine and Wealth with our customers. We always get started a little bit early, by the way. We're going to cover nest egg, a couple little ways to tweak it or test different scenarios without ruining the plan that you may have built. So if you are one of our customers and you've got nest egg and you want to play along, come join us tonight. I'm getting a head start. Oh, yeah. All right. Also, in our research site, I already showed that. You've got a couple posts in there you might want to check out that have just come up recently here. I guess I need to update. That does that every day. All right, let's go to the sector breakdown here for the day and take a look at what's going on. You got tech stocks. A little bit of a recovery, tried to do its thing, did a little comeback today, largely thanks to Apple. Had a little bit of a recovery day, although there was some bad news out there, I thought. Microsoft up 1.33% on the day. Nvidia, you also notice, had a little gain. It's also one of the stronger ones overall. But really, semiconductors played the game. I'll look back at those. We've been saying semiconductors the last couple days now. You got CLAC moving higher. AMD we already looked at. Skyworks as well, just little gains there. They stood out as one of the more stronger areas of the tech sector if you're looking. Going over to basic materials there, made an attempt to recover. It's down almost exactly its 10-year average. If you go into the dojo, you're going to look at a post that Cody did for us. He did a September sector breakdown. If you go read this post as a research member, you will see that the basic materials sector is performing basically right on par with exactly how it normally does in September and the second half of September. So very cool how the stats continue to play themselves out if you want to take a look at that. As far as the sector today, it came from those relative strength stocks that we've been talking about. September 9th and September 11th on the closing beat, we talked about a few of these stocks showing relative strength. If they pulled back, they got to go on a watch list. You got Lind was one of them today. Air Products, which was going to close negative. It actually did recover quite nicely by the end of the day. And Sherwin-Williams, one of the stronger ones out of the group. That's where the money's going in the the basic materials sector there. If we go over to financials, today was an oversold bounce, basically, is what you got going on. If you look at some of the stocks there, the financials broke down. You got a little bit of a bounce there. Goldman Sachs was one that stands out, sharp reversal. JP Morgan was the biggest contributor out of the group. It's just because it was a bigger weighting there. It did close down on the day, though. And Wells Fargo got a much needed bounce today. I'm not saying that's the bottom, but boy, they needed a bounce. Got 2% there. You look at something like State Street. That one's one of the oversold ones we talked about on our watch list yesterday. It's trying for you. You got Citigroup, also one of the oversold banking stocks there. Take a look at yesterday's watch list video if you want to look at a more detailed approach for that to see what we're talking about there for the financials. If we look at industrials, decent day there, broad strength across the board there except for the airlines. You want to look at something like John Deere, the strength stocks. Everybody's picking on strength. John Deere, Caterpillar, Johnson Controls even, right off the 50-day moving average. Weakness in Boeing. Continues to break down under the 150 area. There you go. I know a lot of people want that to pull back. You got Alaska Airlines, and basically every airline was weak on the day. Delta Airlines, they need money. United Airlines, they need money. They did agree to hold off their furloughs, though. But other than that, if you look in the industrials today, everything pretty much did okay besides those airlines. Darn airlines. Hey, lastly, I'll take you over to the healthcare sector there. Healthcare was the weakest sector of the day, all the way back to the 200-day. I very much remember saying, boy, I'd like to see it down to the 200-day. Finally got it. It's in the area. Lost 0.5% today. It was the weakest, like I mentioned there. And there's a couple names that just really stand out as kind of interesting. United Healthcare, also to the 200-day moving average. On Tuesday, we talked about Edward Life Sciences coming back to the 200-day, maybe giving you an opportunity there. It kissed it almost perfectly today, so take a look at that one. And Johnson & Johnson, not really doing much today. It was trying. That one kind of faded away, so no real excitement there. Hey, let's go to the notable new highs and lows for the day because you're not going to have any new highs. There were no new highs to take a look at. You've got new lows. You got 3 of them on the day. I put them in order for you on the screen. You got Coty, C-O-T-Y, they make makeup. Hitting new lows. We talked about this one. Flirting with new lows, finally did it. Molson Coors, the one that we talked about over the last couple of days, as teasing it making new lows, officially did it today. Though it did recover. I mean, that's something. It tried. Huntington also made new lows just ever so slightly. You've got Walgreens, the next closest one, right? And they've already made new lows, but next closest to making new lows again. That one's very weak. Hopefully you get a higher low there. And also Gilead Sciences. This looks like one that rolls over, makes a quick new low, and then snaps back. We'll see what happens there, but that's really it. Gilead is less than 2% away from making a new low, and Walgreens is less than 3% away from making a new low. So let's go over to our watch list for the day. We're going to talk about energy stocks here today. This is not an easy one to talk about, right? Energy's weak. It's the weakest sector out of the group. For the year, energy is down 50%. If you look at energy, however you want to look at it, you got a 50% decline year to date. That's by far the worst performing sector overall. So what we're looking for is any signs of strength. If energy tries to recover, I don't know why it would like tomorrow, but if it tries to recover, is there anything interesting we can take a look at? It's not perfect, but take a look at the watch list that you have there. I'll go through a few of them with you. You got Williams Companies, one of the more stronger stocks. It did not roll over compared to energy. Take a look at that chart. Take a look at energy, right? Much more weakness there. It's very easy to just sort of play the little game with like a kindergartner and say which one looks like it's going higher. Williams brand sticks out as one. There's not a lot to choose from here, but you got Cabot Oil also holding up, very volatile in a sloppy range there, but that's one maybe for a watch list. If you're building a watch list to take a look. You might wonder, Chevron's on the list there. It sure looks a lot like energy. It's not down as much. It's very close, but it's not down as much, and there's not a lot to choose from in the energy sector right now, so that one's on the list just as a watch list item. Hess also not down as much as the sector, still down, very, very rough, but not down as much. Kinder Morgan also down, just kind of looked like the volume was perking up there a little bit. I don't know, it's probably early on that one, but if I had to build a watch list like I do every day, I would choose that one as well. You got Pioneer, PXD is a ticker symbol, not falling as much, and in particular in the short term here, also not falling as much. I don't know if it's great. You can see as we go down the list, we're getting to worse and worse choices. But if you have to build a little list, these are some to look at. Baker Hughes, a little bit of a breakdown there, but it's been one of those, like, it breaks down and it comes back up, and then it hits a new low and it comes back up. So there's something there. I don't know, much to say. I've done more research than that. Just seems like every time it dips, there's people willing to buy this one over some of the other ones. I don't know why that is, but we'll take a look as that one continues. That's really our watch list. Real simple one here for you today. Wanted to focus on a particular sector in general, just to help you out with that. I will go over to stocks in the news now. I will take your questions. If you have questions, feel free to post them. I'll do my best to try to answer them for you. Let's start with Apple. There you go. Hey, this whole App Store thing, it's been a problem for the Fortnite guys. Well, Match Group, Spotify, and a couple others have now joined the vocal argument against maybe the duopoly that they kind of run there. So a little bit of weakness there. If that builds and more people start joining those forces, you got yourself a little bit of a revolution there. So that one came up. Tesla, there you go. Tesla, there was a report out of Reuters today which hit the stock early in the day, but it did finish higher. They said that their lithium production plants really have quite a bit of headwinds, more so than they're leading onto, and so maybe that's something that shouldn't be priced into the stock. Didn't matter. It was down a little bit. People came in, swooped up and bought it earlier today. You got Twitter pulling back off the excitement over the last couple days. The Verge had a little report that came out today, said they're testing direct voice messaging systems. That was pretty cool. I don't know if it'll be a standalone app or whatever, but probably for the watch, something like that, or Alexa and things. If you want to send tweets, sounds like the way of the future, right? Ulta down a little bit on the day. They're going to hold off. They're going to delay their plans for expanding into Canada. They were going to go gung-ho and sell a bunch of shares and then go take a bunch of money and build and expand into Canada. They're going to put that on hold for right now. Stock a little bit lower. Hey, Penn National, great post in a research site, by the way, that Cody put together comparing these stocks together, Penn National and DraftKings. Stock was down 7% today. They're going to issue 14 million more shares. Raise money when you can, not when you have to, right? That's like the coolest lesson that the stock market teaches you. Penn National's enjoyed a huge run here, a lot of what we call celebrity notoriety and excitement around the stock that they wouldn't have otherwise had. And so the stock was down because they're going to sell about 10% more of the shares that they have outstanding. They got about 140 million shares. They're going to sell 14 million shares to raise some more money there. It's about 10%. Generally seen as a bad thing, but we'll see. They need to raise money, or they want to raise money. They can raise money, so they're going to raise money. Treat your personal finances like that. I know a lot of people disagree with me on that one. Hey, let's take a look at something here real quick. Tomorrow you got Carnival Cruise Lines reporting earnings. You can get really confused real quick about how this all works. Do they beat on earnings? Does the stock go higher? What do we expect? Do they normally beat on earnings? A lot of times it's just taking the data and breaking it down in a real simple way. So I'm going to attempt to. Let's see what we have here. Little hiccup. There we go. So let's go over to, let's look at it this way. Here is the all-time earnings report history in hopefully a simple way to understand for Carnival. Let's see what happens. Let's take the data. Let's just compare it to tomorrow and see what happens. They beat on earnings 85% of the time. They beat on revenue 61% of the time. It's not bad. It's not great. It's not bad. We're particularly looking at quarter 3 here that they'll be reporting. They've beaten on earnings 100% of the time for third quarter earnings. because it's coming out of summer, right? So typically there's a lot of excitement, a lot of travel, and all that good stuff. If they raise their guidance, they raise it, believe it or not, the most in the third quarter. It doesn't sound like a lot, 6%, but that's actually high for them. It ties the first quarter there. Third quarter earnings response has been positive 76% of the time. What that means is whatever happens for the third quarter earnings, stock's been higher 76% of the time. It's also only one of the quarters where they raised guidance. They've only done it once. This company's not known for raising guidance there. The focus is on lowering guidance for Carnival Cruise. That's where it gets hit. Let's take it a step further, as we normally like to do. Here is every quarter where they beat on earnings, but they lowered their guidance. So what I'm trying to sort of illustrate here is it's all about forward guidance for this company, whatever happens. So we took their their earnings versus expectations, any one that beat the expectations. We then looked to see if they lowered guidance. If they did, we looked at the return of the stock the very next day. If they lower guidance, the stock averages a decline of 1.1%, median 1.2%, all because of guidance. Now, it could be that all earnings cycles produce something similar. So what we want to do now is compare when they lower guidance versus all other periods when they keep it the same or raise guidance. They've only raised guidance twice, by the way, so it's not very common. So here we go. I had to break it into two pieces so you could see. I hope it's not too messy. If we look at every other time where they beat on earnings, but they didn't touch guidance. They said, yeah, everything's basically as we expected, or they raised it. You can see only two times in history they raised guidance there, September 21st that we talked about before, and March 22nd, which is in the first quarter there, so a little bit different. When they leave guidance alone and they beat on earnings, stock has a much different performance there. It's almost a complete 180, right? Up about 1% average, median 0.7%. So a huge difference there, which lets you very quickly see, all right, I see the data, I see the data, I see the data. What does it tell me? It tells you that the focus is really going to be on how Carnival feels the future is going to be. If they say, look, we know things are rough, which, by the way, their earnings estimates are for a loss of $1.90. That's way more than people are expecting. So if they even beat by a penny or something, that'll be seen as positive. Now, what's the guidance? Do they come out and say, we don't know if we're going to get these ships back out there? Or do they say, we've got a couple ships moving around, we've got a little bit of traffic overseas, we're generally optimistic about the future, but we're not saying we're gung-ho, right? So that's what we're looking for with Carnival tomorrow. What we'll do is we'll come back to this tomorrow to see how did Carnival perform, what did they report, and see if the stats have any sort of, if they play out in any sort of way, or if I just wasted all my time. So we'll see. But I hope you enjoyed that. All right, what else do we have here? Yeah, that's it. Let's take your questions and see what we can do for you there. Guidance is the most critical piece for sure, especially for Carnival, and that's how I come to that conclusion. Something like Netflix, it's not going to move the needle, right? Doesn't matter what they say. It's all subscriber counts. I use that as an example quite a bit there, but that's what you want to take a look at for things like that. You sent all the paperwork to transfer your Oh, well, thank you. You did. I appreciate that. Hopefully the check doesn't show up in our office because you don't ever give us money. We're one of the only financial advisors. We don't touch your money. We manage your money, but we don't have access to actually taking money out, right? No way I would do that. So we want to make sure it was done that way. Yep. All right. Lockheed Martin. Yep. Some of the defensive stocks really trying lately, but Lockheed Martin's been awfully quiet there. Where was your question? I missed it. Think it's getting back above 400. If it does, that's just the start though, right? So if it gets to 400, it doesn't really do anything. You want to see it get above and hold above 400 to let you know you're done with this couple month range of really dead money, nothing really happening there. So right now, there's no reason to believe it's going to move up or out, above or below the range. But yeah, I mean, for any level of excitement, got to get over 400 there. I agree. Oh, there's my Boeing people. Yeah, now look, Boeing, I mean, I know people have said basically you'll buy it at any price, you just want it as cheap as possible, and the fact that it's selling off and there's this real negative sort of narrative out there, I can understand that. Hey, if you like it at 146, probably love it at 1.25, right? I love it. I love it. Bitcoin's the future. You're telling you from great experience investing in it how the wisest thing to do, especially at the current rise. Let's take a look at Bitcoin. So Bitcoin's had a good day today. The issue with Bitcoin is the hedge against the market. It hasn't been there, and that was what was largely expected. So if you don't have that, what's the reason for it? That's where people are saying, I'm not going to put money in there if I have no hedge. The idea was instead of using gold, you could use something like Bitcoin. I get that it's a great tradable product. It's a lot of fun to trade. Bitcoin futures are certainly very active, but I don't know. It's got a lot of proving to do before people adopt it in a large way. Yep. Raytheon keeps getting more government contracts, but is getting dragged down by Boeing and the airlines. I think it should move more. Well, and also the defensive sector there. So overall, that hasn't been a sector that's been very exciting. Hasn't had a lot of, industry that hasn't had a lot of movement into it in terms of new money, new dollars coming into it. And that just has to change. For now, there's no excitement here. When you get to the end of months, end of quarters, people look at their portfolio and they say, what can I tax loss harvest? What can I look at to sell, lock in a loss, and maybe put that money towards my winners? It's very much the market we're in right now. Or the opposite side of that, you got fund managers that go, I have to report to customers. I'd rather not show them a bunch of losses. Let me sell the losses and put the money towards the winners there. Common practice. And so you've got a lot of that going on when there's no buying, but you have that little tiny bit of selling pressure. That's why you have Raytheon not really responding to anything else. Yep. Oh, yeah. Hey, well, what do they call Thursdays? A Throwback Thursday, right? Got a little something for you. If you didn't see our commercial yesterday, Throwback Thursday. We're going to take a little retro here today and see what you think. Enjoy the rest of your day. If you're one of our customers, we'll see you at Wine and Wealth here in a little bit. Grab your nest egg, get everything all set up. I'll be ready and waiting for you. Happy to answer questions. And for the rest of you, thanks for your support. I appreciate you watching and enjoy our Throwback Thursday commercial.